Someone who might like Shake Shack would be Warren Buffett, and he released his annual shareholder letter over the weekend, offering a glimpse into his thought process, highlighting new information about Berkshire Hathaway as always. And joining us to discuss is equity analyst Cathy Seifert from CFRA Research. So Cathy, what stood out to you from the letter this year? We were discussing earlier in the program that it kind of sounded like the last few versions of this annual letter to shareholders. What'd you make of it?
Well, in terms of the letter, I thought one of the things I thought was really interesting was sort of the political commentary that ever so subtly was inserted into the letter, which was basically talking to people on the far left that basically our country has done, quite fine, thank you, being a capitalist country, and to those on the right that the country is, America is already great again. We don't need to make America great again. I mean, that was one of the takeaways that I had from the letter, but I think there was just so much else going on with Kraft and with some of the other things that in some respects the tone of the letter I'm getting almost an increased sense of frustration emanating out of Berkshire Hathaway in terms of, the lack of acquisition targets or the inability to close a big deal, things like that. So I detect a source of frustration or a sense of frustration.
I'm certainly frustrated by not being able to find any big deals, but they've got to be frustrated with what's happening at Kraft. And let's talk about Kraft Heinz, because you pair this annual letter with then the interview that he gives on Monday morning to CNBC. He said that he's overpaid for Kraft, but that he has no plans to sell his stake in Kraft. What are we supposed to take away from that?
It's very hard to reconcile some of those comments. And, I have to say that almost any other chief executive who said that would probably be called to task, and he's not going to be called to task. I mean, the fact is they probably did overpay for Kraft. And, to sort of link in or loop in with what you were talking about, Shake Shack, look, the consumer tastes are changing, consumer preferences change. Kraft Heinz did not keep up with those preferences. We saw that in the write-down of the brand value, and that's a significant black eye in terms of Berkshire Hathaway and their ability to assess value and to, value acquisition targets. I mean, it's certainly a black eye, but I think if you look at the overall environment for acquisition targets, I think one of the issues is if you look at the properties available for sale, they're either sort of broken stories that need restructuring, and Berkshire doesn't necessarily have the infrastructure to do that, or they're private equity exit strategies that have valuations that sort of make Berkshire gag. So against that backdrop, it's not surprising they haven't found a deal that suits them.
And Cathy, speaking of other things that someone else would be taken to task over, I found his comments on Oracle just bizarre, frankly, considering the way that Buffett has liked to operate that securities portfolio, saying that I bought some Oracle, then I realized I didn't know what I was buying, and then he sells it all. And I think at this point, Kraft Heinz is really the main event here, but I just find it interesting that it just seems like he's pressing a little bit in a sense. I don't know if you get that sense from the way Buffett's speaking about his investments.
I think some of it has to be discounted in terms of the style, the Buffett style. And I don't mean his investment style. I mean the interpersonal style and some of the communication style. And I think some of the commentary, if they were said by someone else, would be a much bigger issue. So I do think to a degree, and I don't want to say the street discounts it, but I think the street sort of looks the other way regarding some of the commentary and focuses on the black and white. And quite frankly, this quarter there was a lot of noise in the numbers. There was a lot to focus on that wasn't all that positive. And so I think even if investors just focus on that, they have enough issues to digest without even trying to interpret what he's saying on CNBC Monday morning.
Last week had Scott Rothbard on from Lakeview Asset, and we were talking with him about trying to find deals for Berkshire. And one point that he made is that they're just not in Silicon Valley. And, the deals are not going to come to them. Like, he's not getting the calls right now. Is that a systemic problem for Berkshire Hathaway?
I think it is. And I think it also, I mean, and I will say that I think the culture at Berkshire Hathaway is changing. I think by virtue of some of the transitions that have gone on and some of the changes on the investment side. But, you know, the deal pipeline, whether or not the deals are being brought to them, also speaks to some of my earlier comments about the nature of the deal pipeline, that maybe they're not getting the deals. I don't know what they would do if they were presented with some of those deals, because if you look at some of the framework that Berkshire has long articulated about the kinds of deals that they look for, very little of the deal pipeline in Silicon Valley would appeal to Berkshire. So in some respects, it's sort of out of the money either way. I mean, the ironic thing is Kraft Heinz was sort of a perfect Berkshire company, quote unquote, which is sort of ironic.
All right, Cathy Seifert at CFRA, thanks so much for joining us.
Thanks.